Hey everybody, this is Ryan Mowry with the Stock Market Bubble Update, and we have the Good Friday trading week taking us all the way back up to all-time highs for a second straight week on the S&P 500. However, we're still lagging on the Russell 2000 and the NASDAQ 100 and the NASDAQ Composite. For the week, the S&P 500 finished up 1.1%, the NASDAQ 100 finished up 2.7%, NASDAQ Composite finished up 2.6%, and the Russell finished up 1.4%. So it's a little bit of a change up from what we've seen in previous weeks where it's been either the S&P 500 or the small caps that have been leading the market higher. Instead, we're finally seeing big tech come back into the picture and lead the way. In this past week, we saw this miraculous finish for a quarter end that saw March go for the NASDAQ and the Russell from negative territory back up to positive territory so that all three indices finished positive for the month. So now we're going into the month of April, and this is actually the last of the best 6 months of the trading year, or so they say. You had that whole saying, sell in May, go away. That's not always true. In fact, most of the time it's not. It's just, there was a time where it used to be true. I don't really think that carries that much weight anymore. Nonetheless, April has tended to be the best trading month of the year for both the Dow, the S&P 500, and the Russell. For the NASDAQ, it's the second best trading month of the year. But a lot of stocks are still lagging in this market. You have the T2108. This is the indicator that measures the percentage of stocks trading above their 40-day moving average. As you can see, going all the way back to November, it has been on a slow, steady decline lower. In fact, this past week, we were only at 50%. Last week, we were at 35% of stocks that were trading above their 40-day moving average. And that's with a market that sees the S&P 500 trading at all-time highs. So what does that tell you? It means that fewer and fewer stocks are participating in this rally. And yes, we've had a pretty good bounce this week in the indicator, and you've seen a huge rally this past Thursday that sent it back up to 56% of the stocks that are trading above their 40-day moving average, but it's still quite the divergence from what we saw in November and December when stocks also were rallying at all-time highs. When you have the S&P 500 trading at all-time highs, the T2108 really should be trading somewhere around 75 to 80% of stocks trading above their 40-day moving average. But check this out, you have a total breakdown in the VIX this past week. We haven't been at these levels since pre-COVID. In fact, you can see there's this huge support level that's been supporting the VIX going all the way back to August of this past year, and it broke. It broke in dramatic fashion. It's now trading at 17.83. This sets up for a potential move down into the 12s and 14s like what we saw much of 2019. And if that happens, you're going to have the stock market, particularly the S&P 500, go well beyond the all-time highs from where it's at right now. And now I'm going to get into the charts where I'm going to dissect the S&P 500 on multiple time frames, the NASDAQ, and the Russell 2000. But before I do, I want to tell you real quick about my YouTube membership down below. It's a really cool feature that goes beyond these videos here where I give you all of my market research each and every day. I'm going to tell you each day what stocks I'm looking at for my daily setups. I'm also going to provide you with my weekly watch list. I'm going to update those multiple times throughout the week. That's going to be for both bullish stocks and bearish stocks. You're going to get the most intriguing charts of the day. I'm going to update you always on the S&P 500, the NASDAQ, and the Russell, as well as providing you updates on all the FANG stocks, including Microsoft and Tesla. So check it out down below, click the join button, and become part of the team today. Check this out. I've been highlighting this resistance level going back to February of this year. It broke out of it this week. A short-term breakout, very impressive. Now it needs to see some follow-through in the days ahead. It can't just simply break out and then head fake and come right back down into the trading range of the past couple of months. That to me would probably be the worst case scenario, because at least if there is a real legitimate breakdown, you can trade the market short. But if it keeps trading in a nasty chopping range, it's very hard to extract much profit out of the stock market. Unlike previous rallies, we're actually starting to see some volume creep back into the S&P 500 on these rallies where they're actually above average. That's a good sign for the S&P 500, but in later charts, I'm going to show you what I'm seeing on the monthly charts of the SPY and also the Russell, which might be actually a red flag instead. This is the biggest obstacle for me for the S&P 500 going forward, and that's this massive, massive bearish wedge. It's not broken down and it's not broken above it yet. So it's going to be key for both the bulls and the bears to do something with this, because it's just about as narrow as you can get. So until it really breaks in one direction or the other, this bearish wedge is still in full effect. For the bulls next week, because this is a pattern with trend lines that are going higher, it needs to have a dramatic follow through next week. To the downside, you just need to show some conviction to the downside to hold some losses and to break through some moving averages like the 20-week moving average that you're seeing here on the weekly chart. If it can do that, and it can also show some follow through in the weeks ahead, you've got an incredible opportunity to profit on a market pulling back. The same can be said for the SPY monthly chart here. It's rallied 4 out of the last 5 months, and you got a nasty bearish wedge there. Same thought process goes into the monthly as in the weekly. It needs to show a dramatic breakout in one direction or the other to really get us out of this pattern. Otherwise, there's just going to be a lot of choppy trade action going back and forth. Even if it does go higher, it's going to be a very difficult march higher as long as we stay in that trading range. Now check out the NASDAQ 100, QQQ. It's a pretty intriguing chart actually, because you have what some might call it a cup and handle pattern. That's fine if you want to call it that. Others will say, okay, it's like a inverse head and shoulders pattern with a very elongated right shoulder. Either way, what's very clear on this is that there's a breakout level going all the way back to late February, and it's broken just slightly above it, and that's big. Now you also have a little bit of a gap from Thursday's price action that lends it to possibly being filled. You don't want that in the near term. It can be filled later on down the road, but if you're bullish, you want to see that follow through going into next week. And notice how it couldn't really break through the 50-day moving average on an intraday basis, so what did it do? It gapped above it and it ran. You'll see that a lot when it struggles with price resistance and the market's still super bullish. You'll see it gap up above that price resistance instead of have to deal with it on an intraday basis. Also worth noting too is you may actually have a higher high being formed here. That is the first time that's happened over the last 2 months. In fact, the downtrend that started in middle of February has now been replaced by an uptrend that's beginning to form. So perhaps we're in the beginning of a new price expansion to NASDAQ. Wouldn't be shocking because, in fact, we are in a stock bubble. And what does a stock bubble mean? It means prices go way higher than you would ever expect. And while they probably are a little bit higher than anybody would expect at this point in time and post-COVID, still can go higher. That's why they say the market can stay irrational a lot longer than you can stay solvent. So you got to respect the trend line. It's still trying to go higher here. There was a point in time last week and the week before where it did legitimately look like it was going to break down. But once again, and we've seen this many times, the bulls step in right at that critical moment and they rally the market right back up. Now the weekly, it's improving. Okay, it's had about 6 weeks where it's been not that great, but this past week, that was a pretty strong candle on the weekly chart, about as strong as you can get. And it's at the top of this trading range over the past 6 weeks. But now going forward, you need to see another week of similar price action just to clear all doubts that it's done with that choppy price action. Now, check out the Qs on the monthly chart. What do you notice? The last 3 candles have been doji candles on the monthly chart. That's a little bit disturbing because it means that overall in the grand scheme of things, traders are starting to lose a sense of direction. It goes higher, it can't sustain the moves higher. If it goes lower, it can't sustain that move lower. It becomes non-directional. And a lot of chop, just like what we've seen over the last 3 months. But I pointed out this a little bit in the last video, and I want to point it out again here, particularly on the monthly chart, is the increased volume spike over the past month. That's a lot of volume for us to have not actually gone anywhere, which means there was a lot of buyers, but there was also an equal amount of sellers in the market. And that's going to tell you there that the sellers are trying to distribute their shares to the buyers. There's still a lot of retail traders out there, but it looks to me like the street is trying to offload a lot of their shares right now. You can see the same thing on the IWM monthly chart, a notable volume increase on IWM, but what do you get? You get nothing. It didn't really go anywhere. Yes, it finished higher for like the 6th straight month, but the candle was very small and it closed just a shade below where it opened up at the month at. So that's a doji candle, non-directional, and it shows that there could be some distribution when you pair that with the high volume reading for the month of March. Now, over the past week, we saw a lot of rotation. Even though the Russell still finished higher on the week, you still saw some rotation going from the small caps into the large caps. That's why you had such a big rally in tech, which was largely fueled by the rally in semiconductors. Semiconductors had a huge week, and that took a little bit away from the Russell, which has previously been leading the market higher. But this time around, it actually lagged the NASDAQ 100 and NASDAQ Composite. But again, going back to February, we've been talking about there's this double top on the chart. That doesn't look like it's going to confirm anytime soon, and it may break out to all-time highs and nullify the pattern altogether. However, we're still in a sideways chopping range on the IWM, so my focus is not going to be on small caps in the coming week. Very much sideways, don't want to be in the small caps right now. My focus would rather be towards the tech and large caps. And then of course you got the weekly chart, and there's a lot of chop going on right there too. And you can see there with those long doji shadows on the bottom, there's been a number of attempts to sell this index off and it hasn't worked yet. It's been bouncing back up. IWM has got the dip buyers at the 207, 208 level. Every time it gets down there, it keeps getting bought up. So continue to watch for that. The moment that fails, you're probably going to see a pullback that retests the trend line off of the March 2000 lows, which is just south of 200. Look, the market's blowing a lot of people's minds right now. You got a lot of people, they're getting their $1,400 stimmy checks. For some people, there's like 5 or 6 of those coming in, depending on how big their family is and what are they gonna be doing with it. A lot of them are putting it into the stock market. You got interest rates that are still low. You've got the president and you got Congress that are constantly putting more and more money into the economy. And as a result, it's helping to propel stocks higher, not to mention the upcoming multi-trillion-dollar infrastructure plan that's likely to get through as well. So while I wouldn't mind seeing a pullback in stocks just to give some relief to these high runners, just to pull back the price action a little bit, I'm not overly optimistic that's going to happen at this point. Every time we start to sell off, it gets thwarted and you see the dip buyers come right back in. I hope you enjoyed this video. Make sure to like and subscribe. That helps me out enormously. I can't even express enough how much that helps me. I think you guys are awesome. I appreciate you guys listening each and every week. Tell me down in the comments below, what's your plans for April? What's your favorite stock picks? Which stocks are you looking to get into next week? I want to hear about all of that and more. Thank you guys, and God bless.